What is good, gang? Today we're going to be going through our regularly scheduled pre-weekly call for the week of February 27th. Now, it is monthly close, so Friday we're going to have NFP. Let me double check the news, but that's pretty standard. No NFP this week. Okay, good. We like that. That's weird. I wonder why it's not the Friday. Anyway, so we do have monthly close. Let's go over last week. I'm going to clear up some stuff from the chart here and here. Last week analysis, our target was good. 75% of the weekly wick. Narrative was a little off. We did not get the retracement I thought we were going to get, which is entirely okay. Going into this week, really, I'm looking at this liquidity pool. Yes, this is here, but for me, if it's going to go up here to this liquidity pool at 105,631, this is, in kissing distance paired with a premium array. Price needs to close daily candles inside of this area. Make sure it's not in the weekly. Yeah, price needs to close daily candles inside of this area to rebalance it, because this is a volume balance. So until there's bodies inside of it, it is remain inefficient. As far as narrative goes for the week, I do have a couple things in mind. Let me do this real quick. So besides the upside level I just gave you, which is the liquidity pool, there is this area here. There's this old daily inefficiency. And we're going to leave that on our chart. Make sure this is this. Okay. So this can be viewed as a breaker, this candle here. I don't want to see price below this midpoint here. And ideally, I'd like to see part of this inefficiency be left open. Here, I'm going to zoom in timeframes real quick. I can delete this because this has been taken, and I'll drag this over. This is where we're looking. Let's go to the 12-hour. So this is an order block. Again, I'm not looking for, still not enough. All the way into the 4-hour for this. I'm not looking for any real retracements until this liquidity pool has been hit. The reason for that is I'm pairing a higher time frame range. I don't know who saw my tweet, but you have a monthly sell side liquidity pool level. So we need to pair this with a larger liquidity pool before we expect a deeper run into discount. So that's why I'm zooming so far into the 4-hour. We could run buy side, very small run, come into this 4-hour inefficiency, run here, and then either go higher or reject. But I'm going to leave it like this because I'm not going to predict what we're going to happen when we run into this volume balance and buy side liquidity. Drag this over and make this So that's what I have for dollar. We could be running this, in intra week, like Wednesday, or Thursday. It depends what kind of weekly profile we get. If we come right down into this, I'll look at like a Tuesday or Wednesday high of the week and then retracement. But again, we will see. So this is what I have for dollar. Pretty simple. Going to, I get this all in one chart. Anyway, let's hop over into equities. So same thing with equities. Targets were, shallow, and we didn't get that pullback from dollar that we were expecting. But again, very bearish order flow at the moment. This liquidity pool here stands out. Again, not looking for a huge run. So this should be a propulsion block, because this is the order block that caused displacement and a break of structure. This is the order block that gets created that's touching this. So this should be quite a sensitive area of price. So I'm going to mark that out like here. And I'm also going to mark out mean threshold. ICT has fairly particular rules about propulsion blocks. He doesn't like mean threshold to be violated. It's supposed to be a very quick reaction. So those are my two areas of interest for the week. Yeah, I agree with that. Check out the 12-hour. Okay. I'd say the mean threshold is more likely here, but that's an entirely sensitive area of price. So that's what I'm looking at for ES. And I don't know who watched my volume balance video, but super simple, looking at these old areas that price validates, easy break in retest, break in retest. So if you haven't seen that, I definitely recommend checking it out. I've been using them an awful lot lately. NASDAQ, same thing with NASDAQ. Target was good. Didn't get the run into premium that I wanted. Put this on a chart. It's not enough range though. Let's go to the daily. Real quick glance at the monthly. Efficiency. So this is a mitigation block here. It's a mitigation block because it didn't take out any swing low. Notice how there's no swing low in this range. So it's not a breaker block, it's a mitigation block. I am gonna delineate the mean threshold of that here, which pairs with this weekly inefficiency. So if you guys notice on all of our charts so far, we are approaching premium arrays in the form of buy side liquidity, equal highs, and a volume balance on DXY, and we're approaching higher time frame discount arrays on the others, right? So perfect retracement idea storm is brewing on multiple intra-market correlated charts. So something to take note of. And this is MB daily. I'm actually gonna make this fair value. the range here? Small range. For me, it really depends on where dollar is when these targets get met, because I'm not going to be looking for deeper runs into discount after until I see a reaction from dollar at the buy side level. So keep that in mind when I give you targets for this week. You know, we can easily meet those premium targets for dollar in this area and not come into this area until we re-seek some sort of premium on risk markets and discount on dollar prior to coming back down for these. I like this fair value gap here. And I'm going to use the fair value gap low, but this would be your second target. So that's what we got for NASDAQ. Dow. Now, I've been pretty reluctant to do Can everybody hear me? Someone put in the chat that there's no sound. It shows that my mic is being picked up. Yep. Okay, thank you. Sorry, Ailey. Sorry if I butchered your name, but sound should be working. All right. Thank you, everybody, for helping me out real quick. Now, I've been pretty reluctant to do analysis on Dow because it really hasn't done much. Digging into this low resistance liquidity pool, actually, we cleared it this week. So Dow might be pretty ugly this week. Large discount pool, not saying it will be. Again, I really don't like where Dow is. It's really reluctant to move. I do expect new lows when it comes to ES and most likely ES and definitely for NQ. I don't think Dow will ever get there. So, you know, Dow's gonna be one that creates SMT at the lows for this market when we get down there, in my opinion. I'll be looking at long term. Again, this is long term. I'm looking at this inefficiency here. And maybe like one of these liquidity pools. I don't want to give anything for Dow again this week. I'm sorry for anyone who trades Dow. I'd be using the propulsion block though, if I were to pick. But this ran a large sell side liquidity pool, so I'm not going to get entangled with that. Gold continuing the grind lower. I didn't give any analysis last week because I got to my pool. I think all of this is fair game. This inefficiency that had an institutional order flow entry drill, this stands out to me. Monthly inefficiency. We're going to pull this over. This is a breaker on the weekly. We have two areas for this. The close and the mean threshold. Close B. Let's go back to the daily. Set up the 4 hour. Order flow is very bullish. We just broke out here, closed below. I'm not expecting price to come above this swing high. And if it does, it's just going to barely touch it. So we're going to be looking for institutional order flow from this area into the breaker block. Again, these targets are going to be depending on when, that's a small range, we're going to do the mean threshold, when dollar reaches its upside target. And below that, we can start considering these liquidity pools, but I'm going to leave you with this for now. And that wraps it up. So I'm going to touch on something that I don't normally go over this week. I tweeted out either a week or two ago that the interest rate market is going to be telling you everything you need to know. And put this side by side with DXY real quick. Actually, I'm not going to do that. So we made SMT at the lows. DXY created lows here. US, the 30-year did not. And I look at the 30-year primarily because it's a longer term. So there should be a little bit of delay in the action we see in the 30-year versus the dollar. But, very clearly bullish, and we're going to be recreating highs on the 30-year. Sorry, running into highs. So again, so we're looking at premium targets on interest rate markets, premium targets on DXY, discount targets in risk assets at the moment. So again, painting the picture on multiple fronts. All right, let's go over into currencies. AU gonna be the same thing as the rest of the markets. Good target. Bad narrative, didn't get the softness on dollar we were expecting. Let's clear a bunch of this stuff off. Don't need this or this. And we don't need this because the order block isn't valid anymore. Let's hop over into the weekly. Weekly close below mean threshold of this candle. Again, bearish. This stands out to me. This swing low inside of this old gap as sell side target. That's kind of a large range in terms of what I'm expecting for dollar. It's the range in last week. No, that's good. I'll take that. Yeah. Fair value gap. Again, this should jump right off the chart. You can split this fair value gap in half, and obviously ICT gave us fair value gap anatomy and breaking down fair value gaps in quadrants. If we get a super small dig into this fair value gap, it's extremely bullish. After this, if this creates a shift in market structure, typically we want to say keep it below mean threshold. So we're going to approximate mean threshold right there. Do that. That should be enough. EU, I did not give analysis on EU last week. It looked very choppy inside of this old weekly fair value gap, which we can expect because it's inside of an old premium array. Same thing, sell side jumps off the chart here. And again, this is just based on my narrative, right? Look at the size of last week's candle and just eyeballing it. This is approximately half of that range. I'm not going to measure it. And this pairs well, again, with what we're expecting with dollar. all of them painting pretty much the same narrative. So the week looks pretty one-sided. I feel most people who are looking to participate in this market this week can. Because the hard part's over, prices breaking out, speed is increasing towards prices objective, and that's what we can expect. Shallower runs into the ranges and faster runs towards the targets. GU, the strongest of all of them, very good draw, and this was contrary to dollar strength because they had I think it was GDP or something that resulted in this run up, diverging with dollar before they come down. So we're going to be holding the same target as last week. And I'm going to be using the same narrative on all of them. GU, since it has been the strongest, we can expect possibly a run into this order block. But all very basic. AU, great targets. Again, narrative didn't get the dollar draw we wanted early last week. As far as draw goes, we have a set of equal highs here and a second set of equal highs right above it. Ultimately, we're going to be targeting this all eventually. I missed my... This is the 4 hour, so let's see what we got in the daily and the weekly. Yeah, daily pretty much confirms the same thing. I am going to plot this midpoint here. Narrative wise, we have sell side liquidity inside of a fair value gap, so that's fair game to be ran. I want to see this order block fair value gap. That's what I'd like to see. And I'd consider these the same. I'm just going to put one line here. Pretty simple. One, two. That wraps it up for currencies. I hope we all have a good week, and we'll talk soon.